This is the current stock market update for SoFi Technologies, stock ticker SOFI. Before we begin with today's stock market analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons. Leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. What we are looking at here is the weekly trading chart. Each candle represents a full week's trading period. And this is appropriate because today is Friday and we do have a new closing candle. So that would be this red candle here. So we were lower on the week and the stock is now moving into its -2 standard deviation. Now, as a general rule, moving into the -2 standard deviation is actually a positive thing. I understand that might seem a little bit difficult to believe, especially when you've got all of these, pretty much every trading bar here is red and the closing activity for this week was also negative. However, the reason that we refer to this type of action as a possible buy signal, even in most cases, would be that only 2 to 3% of all price action would be expected to be contained below the -2 standard deviation. So we'll just explain simply what we're looking at here. We've got these upward sloping trend channels here. This bottom green dotted line, that's the -2 standard deviation. The top green dotted line is the +2 standard deviation. So only 2 to 3% of all price action is expected to be trading below this level, and we can see several examples of that in the past. For instance, if we go back to this area here, as you can see, this actually led to a fairly significant explosion in share prices. The stock fell to this would be lows of about $8.60, as we can see here. But if we really zoom in, what actually happened was the stock traded below its -2 standard deviation. So this is a fairly decent representation of how this tends to work. You do see this work, usually you see this work as a reversal area and things start to move higher. So you've got this negative movement here to the downside. In many cases, you can refer to this as a buying opportunity because share prices can't really extend much further. And the last time this happened, the stock actually, rallied from $8.60 to about $32.50. So, you're talking about a move of, close to 400%. It's a 4x price move in, a fairly short period of time. This 860 low happened around the beginning of April 2025. And then these ultimate price highs toward the middle 30s were happening toward the end of October 2025. So, you're dealing with about 6 months of 400% price move. Obviously, that's not common in the market. You don't see that every day. So, it doesn't necessarily mean that the same thing has to happen here. The paradigm could have completely shifted. Maybe the market is viewing this stock completely differently at this point. But if history did repeat itself, just as an example here of what could happen, you could see a similar movement again. I mean, if you did see a 4x movement from $19, you'd be looking at a $75 stock. In addition to this, share prices are also trading near the 100-week exponential moving average. So that would be this light blue line here. In many cases, share prices will bounce off of these exponential moving averages. The 100-week EMA is very closely watched, and it's a very long-term average, so it's a very powerful moving average. It's not as if we're dealing with a 5-minute price chart or something like that. And from the bullish perspective, what would be most interesting here is the fact that both of these signals, the -2 standard deviation and the 100-week exponential moving average, are aligning right in the same area. These both come into play around $18.20. Now, this is not to sugarcoat the situation. Obviously, the stock has been under a huge amount of selling pressure recently, and the stock could be in some serious trouble here after we broke this support zone, which would be seen around 2350. That'd be this area here. The share price has not really seen much buying activity. And if we look at these recent candles, they're basically all red. So for many weeks now, we've been seeing weekly closing price action that has been bearish in nature. This type of price action is also visible in the trading volumes as well, as we can see here. If we just sort of blow up these trading volumes here, we can see some instances where there are some small green trading bars here, but for the most part, there's a lot of red price action. And this negative activity is being largely confirmed by the indicator reading. So you had a bearish divergence here going back to, this would be about November 2024, which means that a lot of this prior price action was not being confirmed by the momentum reading. This is the moving average convergence divergence. That's called the MACD indicator. And the recent price action here is showing that the indicator is ready to cross below the zero line. Again, that doesn't necessarily mean that it needs to occur. If we go back in time a little bit, what we can see is that the last time that type of action was seen, we did see a bit of a rollover right from that area, and there was some positive momentum that started to develop. So, there's still a possibility that you could see the similar type of price action here. And if you did combine that with the trading activity into the 100-week exponential moving average and the -2 standard deviation, that is what would ultimately give you your argument, or the major points to be made for a bullish reversal here somewhat soon.